Hi everyone, welcome to the Buffett and Beyond Research ETF segment of our weekly videos. And what a stock rally. And folks, we're recording this November 18th, 2023. And the top picks are up 83% for this year in the ETFs. So folks, we want to look further. And here's the NASDAQ right here, the NASDAQ 100. You can see that it outpaces the S&P 500, outpaces the Dow Jones, and outpaces the Russell 2000 by a lot. So let's get right into it. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And when we look at these stocks, and folks, if you're not seeing the stocks in this, it's because you're not subscribed to our ETF letter. So if you want to go to our site, buffettandbeyond.com, and get a free 2-week subscription, you can certainly do that. But meanwhile, those of you who are subscribed are seeing these stocks. Now, let's see what's going on here. This is as of the 16th, which was Thursday, and this is intraday, the QQQs. Now, that's the NASDAQ 100, the biggest stocks in the NASDAQ index minus any finance stocks. So the QQQs, called the NASDAQ 100, are up 44.5% this year, with the S&P up 17.1%, and this is as of the other day. Now, here's how the stocks have returned. So the stocks that we picked out, and we have a lot of them in this particular portfolio. In fact, there are about a dozen stocks that we bought, and those stocks are up 83.1%. Now, if you are hedged, which we like to do in these portfolios, folks, because a lot of you are getting older and you want to preserve your money, and even if you're young, the money you put in the stock market, you had to earn it, and you don't want to see it lost. So we know how to hedge the portfolios. So even though the top stocks are up 83% for this year, you're not taking the risk of the market if you hedge. And how do we hedge? We go long these stocks and we go short the ETF. We would have a 38.6% return so far for this year. Now, just in the 2 weeks, because you can see 11/3 here, that's November 3rd, we took our hedges off, and you don't have to take the hedges off. Some people like to take the hedges off, and some want to be hedged all the time. Not a problem. But if we took the hedges off on the 3rd, when we said, okay, we're in for a rally here, and just in these 2 weeks, the difference in the QQQs, in the past 2 weeks went up 6.4 percentage points. S&P went up 3.6 percentage points. But had you taken the hedges off our top stocks, you would have been up an extra 11.5%. So take the 11.5%, add it to when you're normally hedged of 38%, you're looking at something like a return of 50%. If you were hedged all the time, you'd be up 38.6%. But if you want to intermittently take hedges off every now and then, in this case, this particular case, and this has been a strong rally, you would be up about 50%. So that's how the hedges work, folks. And some want hedges on all the time, and some people say, hey, if you think we're going to have a rally, and the indicators show that, which we show in our Saturday market letter, so we also put that on YouTube here, folks. You would be able to see when we take hedges off and when we put them back on. Now, let us go to how did we do in 2021? Well, in 2021, now that's a couple of years ago, QQQs are up 27%. The S&P 500 was also up 27%. Had a very good year that year. That's what kind of led us into 2022. Might see a correction in here. But our top 5 stocks were up 50.6%. So if you were hedged in 2021, you would have been up about 23%. In other words, you're short the QQQs, but you were long our top stocks. Now, let's go to 2022, and these numbers are all for 2022. The QQQs were down 33.1%, and our top stocks were down 40.8%. But if you were hedged, you were short the QQQs, long the stocks. So again, being hedged in 2021, you would be up about 23%. If you were hedged in 2022, you'd be down about 7.8%. And then if you're hedged in 2023, you're up 38%. And of course, if you do a little bit timing with your hedges, you'd be up almost 50%. So it's pretty nice to be up 23% in 2021, to be down only 7.8% in 2022. And even if you're fully hedged, you're up 38% in 2023. Yes, we are having an abnormally good year, but those are the kind of numbers that we're looking at the present time. Now, let's look at our other strategy where we take the 6 ETFs that we like the best and we buy about 5 stocks in each one of those ETFs. And if we're not hedged, now this is for this year up through November 16th, which was Thursday, we would be up about 42%. So we're getting about five or six stocks in each of these ETFs, and we would be up 42%. If we were hedged, we'd be up 19.1%. But if you're timing the hedges and you took the hedges off 2 weeks ago, like we did, you would be up 24%. So this 24% for the year is up 24% because of intermittent hedging. So you could be hedged all the time. You'd be up 19.1%, folks, which is great. And in other words, more than the S&P 500, which is up about 13.7%. So you'd be up totally hedged all the time, up 19%. If you intermittently take the hedges off and put them back on again, you'd be up 24% just because we caught this latest rally of 2 weeks. And just 2 weeks ago, you would have been up 14% totally hedged. Now, 2 weeks later, you're up 19% totally hedged. Or if you time those hedges, you could be up 24%. So that's very, very nice here, folks. And remember, within your IRA, you can't go short those ETFs for protection. So you have to save some money or take some of the money that you invest in the long positions, and you have to buy the inverse ETFs in order to be hedged. So therefore, without being hedged, our top stocks are up here someplace. The QQQs are up 30-something% as of the other day. And if you bought one of the short ETFs or inverse ETFs, which you can do in an IRA, you would take about 1/3 of that and you would still be up about 20%. Had you bought our top stocks, you would be up about 30%, because don't forget the top stocks are up almost 80% this year. Very abnormal year. I totally agree, folks. We're having a great year, and this is a good time to talk about that. But remember, in the bad year in 2022, we were only down 7.8% if you were hedged all the time. Very nice. So you can hedge in your IRA. You just have to have some cash in order to buy the inverse protection, which is always nice, especially if it's in your IRA. You don't have to go for 60, 70, 80%, or try to anyway. You want to buy the good stocks and you want to hedge those good stocks. And you can do it within your IRA. You can do it even better outside your IRA. So, folks, we had a very, very good rally these past 2 weeks. If you look at our Saturday market recap, we are looking, I'm recording this on Thursday afternoon, I'm looking at a possible short-term top in here. And you will know in the Saturday market letter, if you take a look at that, what we did on Friday afternoon before the market closed. So, folks, if you want to live on this beach like Jimmy Buffett once did, put on your flip-flops and go walking. And, folks, you have to know how to invest even better than Warren Buffett does now. So we had a great 2 weeks. Go out, walk on the beach, walk on the golf course, sit and watch television, be with your family. And, folks, we'll be back here this week. This week is Thanksgiving, so you might take a few days off. Hey, take the whole week off. You made some money now this past 2 weeks. So, folks, you stay safe, and we'll see you back here next time.